Tim Stanovec in New York. It's time now for Quick Take by the Numbers. It's where we give you the numbers that tell the story. This afternoon's number is $3.5 billion. The fintech company Chime has made more than $3.5 billion in stimulus deposits available to more than 1 million customers since Friday. This comes as some big banks, such as Wells Fargo and JPMorgan Chase, told their customers over the weekend that they might not receive their stimulus money until Wednesday at the earliest. That sparked backlash from consumers who were hoping to see cash hit their accounts sooner. Joining me now is Chime co-founder and CEO Chris Britt. Chris, thanks so much for being here. In a statement to Bloomberg News, JPMorgan said that it will deposit the money when it gets it from the IRS on Wednesday. In another statement, Wells Fargo said it's not holding the funds and will deposit it as soon as possible and as soon as the date becomes available. How is Chime, though, able to get stimulus money to customers in some cases 5 days before these big banks?
Well, thanks for having me. And I think those statements are accurate. They actually haven't received the money yet. But at Chime, we believe that payments should be fast and easy and free. And when we see through the ACH system that funds are scheduled to arrive from the federal government later this week, the moment we got that notification through the Fed, we decided to make those funds available. And like you said, we've already made available over $3.5 billion of payments to over 1 million Chime members. And it's really helped them when they needed the money most.
So are you making the funds available before you actually get the money, or the banks get the money from the IRS?
Yeah, our bank partners are making those funds available. When we see, if you think about the way the ACH system works in America, there's oftentimes a pre-notification that money will arrive. And then ultimately, a few days later, the money settles with the bank. We do this not just in the area of stimulus payments, but in payroll, direct deposit payroll from your employer every month. So we're actually making available billions of dollars, over $3 billion every month to Chime members who get direct deposit of their paycheck as well. And it's a core value proposition of banking through Chime.
You mentioned banking partners. Can you explain the relationship that you have with banks? Because Chime itself does not call itself a bank, right? It calls itself a fintech company.
That's right. Chime's not a bank. We're a consumer fintech app, and we connect our members to checking accounts and savings accounts that are offered through our partner banks. And we create the interface, design all elements of the consumer experience. We built the tech stack, so we operate at a really low cost structure, and we can deliver those savings back to our members. And we do things like allow you to get your paycheck early. We give free overdraft through a service called Spot Me without charging a big fee. And last year, we launched a new service called Credit Builder that helps people improve their credit scores as well. So it's that combination of services that's really resonating with Americans. And
talk about a little bit how you make money on interchange fees and not necessarily on the traditional way that banks make money.
Yeah, it's a good point. We really don't have a bank business model. It's really more like a payments company. So we make money when consumers get direct deposits into a Chime account, and then they use our card for their everyday payments. And that's really how we monetize. And what we like about it is it's very much aligned with the consumer. We don't profit from heavy fee income. It's not a lending or sort of asset or balance sheet type business. It's more of a payments business. And the stimulus payments is just another example of where we're trying to help. I saw last night that President Biden had tweeted that stimulus payments are just starting to go out, and we were sort of laughing. Well, if you were banking with Chime, you'd already have your stimulus payment most likely.
Hey, do you know how Chime customers are using their stimulus payments?
Well, one of the great things we're seeing is that every time these stimulus payments have come through, we've seen a substantial increase in the amount of savings. Chime offers a high yield savings account as well through our bank partners. And so I'm very happy to see that savings rates have come up substantially. But in general, consumers are doing the things that you'd expect. They're paying off bills, they're buying groceries, they're ordering DoorDash and Uber Eats and all those sorts of things that people across America are doing today.
I'm wondering about your product roadmap moving forward. Right now, you don't have any investing products, but given the interest that we've seen in retail trading, the interest that we've seen in Robinhood, especially over the last year, do you have any plans to add products like that to Chime's portfolio?
Well, when you own the primary everyday transaction relationship with a consumer, there's not only the opportunity to offer additional products, but there's really an expectation. We started in payments products and savings and now credit building. And I think it's natural for us over time to look to do even more in the area of basic lending services, investment services, potentially even insurance down the line. There's no shortage of opportunities for us. We don't have any announcements today, but there's a whole host of areas that we're going to be focused on going forward in those areas.
I'm wondering about the next 6 months, because back in September, you told CNBC that you plan to be IPO ready in the next 12 months. So that would be 6 months from now. Are you going to IPO in the next 6 months?
We definitely believe Chime should be a large, independent, publicly traded company, and we are making efforts to become IPO ready. We don't have any announcements on that front today, but we continue to push forward. I think first and foremost, it starts with creating a product that's really resonating with consumers. And then over time, I'm sure we'll look to tap the public markets, but nothing to announce today.
What do you want to accomplish before you IPO? Like, are there specific roadmaps that you can share or hurdles that you want to jump over?
Well, I think, we're still a relatively young company, so we're continuing through our natural process of maturing, core internal processes. We want to continue to push out additional products and services. Like I mentioned earlier, we launched this credit builder card that helps our members improve their credit scores. So far, we've seen an average among our members of an increased credit score by over 30 points. So we want to have that become a larger part of our product mix. And we've got some investments we're making in our technology stack as well that we think are going to be important for us going forward. So those are just a couple of the examples of areas that we're focused on in advance of a potential public offering.
I'm wondering about the relationship that you have with banks right now. Would it ever make sense for you to fully purchase a bank rather than have these deals with banks to handle your banking?
It could. We wouldn't rule out eventually applying to get a bank charter or potentially acquiring a bank. For now, we really are enjoying the partnership model that we have. We think we play an important role in the financial ecosystem. In a country where there's been massive consolidation, the top handful of banks control, the majority of deposits in America and a huge amount of the lending business. We think we play a valuable role in, acquiring consumer relationships, and then those deposits go to our partner banks, and they use these deposits to fund local lending operations. Our bank partner in Oklahoma uses these deposits to help fund loans to farmers and others. So we think we play an important role and want to be a helpful, part of the overall financial ecosystem. If a day comes where we decide to be, a little bit more aggressive in the lending business and we want to have a larger balance sheet to help fund that, it could make sense for us to become a bank. But for now, we really like the asset-light business model that we have.
Hey, Chris, I can't let you leave without getting your thoughts on Stripe, because the fintech company announcing just a massive round of funding yesterday, $600 million in its latest fundraising, tripling its value in under a year to $95 billion. Massive. What does this tell you about fintech, not just investor interest in fintech, which obviously is there, but the opportunity for fintech companies can kind of disrupt the established norms that exist now?
Well, look, I don't know all the details of that transaction. I do know that it's just an amazing company with really talented engineers and management. So we have a ton of respect for Stripe and the global ambitions that they have. Look, I think investors see an opportunity to disrupt a massive addressable market in the area of banking and payments. There's so much legacy technology out there that is ripe for disruption and modernization, which will lead to lower cost and ultimately better value, both on the merchant side, but in our case, more on the consumer side. So there's no shortage of opportunity ahead of us. And I think investors continue to be excited about those prospects.
Chime co-founder and CEO Chris Britt. Chris, thanks so much for joining us on Quick Take today. Appreciate it.
Thanks a lot.
Well, coming up next,